3 years ago, I was sitting in my apartment at 2 a.m., staring at my trading account. I had just lost $4,000 in a single day. That was money I didn't have. Money I had borrowed. Money that was supposed to pay rent. I remember thinking, I'm never going to figure this out. I'm just not built for this. But I was wrong. I wasn't failing because I wasn't built for trading. I was failing because I didn't recognize the signs that I was actually getting closer. I kept quitting right before the breakthrough. If you're experiencing any of these 6 signs right now, don't quit, because you're closer than you think. Most trading content will tell you about strategies and indicators, but nobody talks about the psychological shifts that happen right before you become consistently profitable. I'm going to walk you through 6 signs that prove you're making real progress. These aren't obvious things. They're subtle internal changes that separate traders who make it from traders who give up right before they succeed. By the end of this video, you'll know exactly where you are in your journey. And if you're seeing these signs, you need to keep going because you're right on the edge of something incredible. Let's dive in. Sign #1. You've stopped chasing every shiny new strategy. When you're early in your journey, you watch a video about RSI divergence and think, this is it. This is the holy grail. You spend a week learning it, maybe make a few trades. Then you watch another video about supply and demand zones. Wait, this is actually the holy grail. So you abandon everything and start over. Then it's ICT concepts. Then price action. Then Elliott wave. Then order blocks. You're constantly starting over, always at day 1. Never building real skill because you're switching systems every 2 weeks. I call this strategy ADHD, and every beginner trader goes through it, including me. Personal story. Let me tell you about my first year. I tried probably 30 different strategies. 30. I started with moving average crossovers. Lost money. Then Fibonacci retracements, spent 2 months on it. Lost money. Then candlestick patterns, memorized every single one. Still lost money. Then MACD. Then Bollinger Bands, then Ichimoku Cloud, which I still don't fully understand. Every time, I was convinced this would be the one. And every time, after a few losses, I'd give up and move to the next thing. The problem wasn't the strategies. Most of them actually work when used correctly. The problem was me. I was looking for magic. I wanted a system that would make me money without doing the hard work of becoming a good trader. The shift. Here's what changed. I stopped looking for new strategies and picked one approach. I committed to it for 6 months, no matter what. A trader said something that hit me like a truck. It's not about finding the perfect strategy. It's about becoming perfect at executing your strategy. So I chose supply and demand zones with key moving averages. That's it. And I made a commitment. I would trade only this for 6 months. Even if I saw better setups. The first month was hard. I still wanted to chase other things, but I stuck with it. By month 3, I started seeing patterns I never noticed before. By month 6, I was profitable. Not because I found a magical strategy, but because I finally gave myself permission to master one thing. The lesson. Here's how you know you're experiencing this sign. You watch a video about a new strategy, and instead of wanting to try it, you think, that's interesting, but I'm sticking with what I'm doing. You see someone making money with a different approach, and instead of FOMO, you feel confident in your own method. You stop saving every YouTube video. You stop joining every Discord. You stop buying every course. When you commit to mastery of one approach, that's when you're getting close. If you've recently had that realization, congratulations. That's sign number 1. Let's move to sign number 2. Sign #2. You're starting to accept losses without spiraling. When you're a beginner, every loss feels personal. It feels like failure, like proof you're not good enough. A beginner takes a loss and immediately questions everything. My strategy doesn't work. I'm terrible at this. Why do I keep making the same mistakes? That loss ruins your entire day, maybe your entire week. You either revenge trade to make it back immediately, or you freeze up and can't take another trade for days. But here's what changes. Losses stop affecting you emotionally. The psychology. Trading is a game of probabilities. Even the best traders lose 40–50% of the time, but they're still wildly profitable because they manage risk and let winners run. To do that, you have to be okay with losing. You have to take a loss, accept it, and move on without emotional baggage. When you're a beginner, you can't do this. You're not thinking in probabilities, you're thinking in absolutes. You think every trade should be a winner. Professional traders think differently. They know trading is like flipping a weighted coin. If the coin gives you 60% odds, you flip it as many times as possible. Sometimes you'll lose 5 flips in a row. That's just variance. But when you're new, you haven't experienced enough losing streaks to know they're normal, so every loss feels catastrophic. Personal story. I remember the exact trade where this shifted for me. I took a trade on EUR USD. Perfect setup. Everything lined up. I entered, set my stop loss, and watched. The trade went against me almost immediately. Within 15 minutes, I was stopped out. Lost $300. 6 months earlier, that would have destroyed me. I would have been furious. Probably would have revenge traded. But this time, I just shrugged. I looked at the chart. I reviewed my entry. Everything was correct. I followed my rules perfectly. The trade just didn't work out. And I was okay with it. I remember feeling almost confused by my own lack of emotion. Where was the anger? Where was the frustration? It wasn't there. Instead, I thought, all right, that one didn't work. What's next? I went and made coffee, came back, found another trade 2 hours later. That one won, made $450. Just like that, I was up on the day. That's when I knew I was going to make it as a trader. The lesson. Here's how you know you're experiencing this sign. 1. You take a loss, and your first thought is, did I follow my rules? Not. Why did I lose? 2. You can take a loss and immediately start looking for the next setup without needing a cooling off period. 3. Your mood isn't determined by your last trade. You can lose and still be in a good mood. 4. You stop revenge trading. You don't feel the need to make it back immediately. Here's what helps you get there faster. Risk less per trade. If you're risking 5% per trade, losses will hurt. But if you're risking 0.5 to 1%, losses become almost meaningless. Track your statistics. After 50 to 100 trades, you'll see that losses are random. This helps you intellectualize what you're experiencing emotionally. Practice mindfulness. After every loss, pause and notice what you're feeling. Don't judge it, just observe it. If losses don't sting the way they used to, that's sign number 2. You're getting close. Sign #3. You're trading less, not more. When you're a beginner, you think more trades equals more opportunities equals more money. So you're constantly looking for setups. Trading every day, sometimes multiple times a day. On the charts for hours. You think that's what professionals do, but that's not how it works. Professional traders are incredibly selective. They wait, they watch, and they only trade when everything lines up perfectly. They might only take 3 to 5 trades per week, sometimes less. Some of the best traders I know only take 1 to 2 trades per week. When you start trading less frequently, that's a sign you're maturing as a trader. Why beginners overtrade? Beginners overtrade for several reasons. First, boredom. You're staring at charts. Nothing's happening. You start seeing setups that aren't really there, just so you have something to do. Second, FOMO. You see price moving and think, it's taking off without me. So you chase at a bad price. Third, trying to make up for a loss. You're not being selective, you're being desperate. Fourth, you think more trades equals faster growth. You think if you make $50 per trade, then 10 trades a day means $500 a day. But you're not accounting for. More trades means more mistakes, higher costs, more emotional exhaustion, and lower quality setups. The math only works if every trade is high probability. But when you overtrade, most trades are medium or low probability. The shift. Here's what changed for me. I had been trading for about 18 months. 1 week, I took 12 trades. Won 6, lost 6. Broke even for the week, but paid tons in commissions and was exhausted. The next week, I told myself I would only take trades that were absolutely perfect. That met every single criterion. That week, I only took 2 trades. Just 2. But both won. And I made more money in that 1 week with 2 trades than I had in the previous month with 40-plus trades. That's when it clicked. I didn't need more trades. I needed better trades. I completely changed my approach. Instead of looking for reasons to trade, I started looking for reasons not to trade. My trade frequency dropped by 70%, but my profitability went up by 300%. The lesson. Here's how you know you're experiencing this sign. 1. You close your platform and realize you didn't take any trades today, and you're okay with that. You're proud you stuck to your standards. 2. You see a setup that would have excited you months ago, but now you think, it's okay but not great. I'll wait. 3. Your trade frequency has decreased, but your account is growing faster. 4. You feel relief when you don't take a trade, not regret. 5. You're bored a lot, but you're okay with that. You understand trading isn't supposed to be exciting. Good trading is boring. If your trading is exciting, you're probably doing it wrong. Excitement means you're over-leveraged or taking too much risk. If you're starting to trade less, if you're more selective, if you're comfortable doing nothing, that's sign number 3. Sign #4. You think about risk before profit. This separates professionals from amateurs. When you're a beginner, you look at a chart and think about how much money you can make. If this works, I'll make $200. If I increase my position, I'll make $500. You're thinking about the upside, the win. But when you're getting close to profitability, your thinking flips. You look at that same trade and think, how much am I risking? Where's my stop loss? What's my risk to reward ratio? You're thinking about the downside first, the risk. And here's the paradox. When you start thinking about risk first, you actually make more money. Why beginners think profit first? Beginners think about profit first because that's why we got into trading. We want to make money. We dream about the wins. Every piece of content online shows you the winners. Nobody's making videos about losing $300 and why that's fine. So your brain gets programmed to focus on potential upside. Plus, thinking about risk is uncomfortable. Nobody wants to think about losing, so we avoid it. We set stop losses that are too wide, or we don't set them at all because the trade will come back. We risk 5% of our account because this one is a sure thing. All of this is profit-first thinking, and it destroys accounts. Personal transformation. Let me tell you about the trade that changed everything for me. I had been trading for about 2 years. One day, I found what I thought was an incredible setup on gold. Everything looked perfect. So I went big. I risked 8% of my account, way more than I should have, but I was confident. Within an hour, the trade hit my stop loss and I was out. 8% of my account, gone. I was devastated. But more than that, I was angry at myself because I had broken every risk management rule I knew. That loss forced me to reevaluate everything. I spent a week studying risk management, and I realized if I protect my downside, the upside will take care of itself. So I created new rules. Rule 1. Never risk more than 1% per trade. No exceptions. Rule 2. My stop loss is determined by the chart, not by my feelings. Rule 3. Before I enter any trade, I write down my risk-to-reward ratio. If it's not at least 1 to 2, I don't take it. Rule 4. I think about my stop loss before my target. These rules changed everything. The lesson. Here's how you know you're experiencing this sign. 1. When you look at a trade, your first question is, where would I be wrong? Not, how much can I make? 2. You've become almost paranoid about risk management. You check your position size twice. You refuse to move your stop loss. 3. You've had trades that would have been huge winners if you used more risk, but you feel proud that you stuck to your rules. 4. You think in terms of probability over 100 trades, not individual trades. 5. You're comfortable with small position sizes. You don't feel the need to go big. If risk management has become your obsession, if you would rather miss a trade than take too much risk, that's sign number 4. You're very close to consistent profitability. Sign #5. You've stopped caring what other traders think. When you're a beginner, you're constantly comparing yourself to others. You're in Discord servers, Twitter, Reddit, everywhere people talk about trading. You see someone post a huge win and think, why can't I do that? What am I doing wrong? You see someone trading a different strategy and you start to doubt your approach. You're constantly seeking validation. You post your trades looking for approval. You ask, is this a good setup? But when you're getting close to profitability, you stop caring about all of that. You stop comparing. You stop seeking validation because you've developed confidence in your own process. The comparison trap. Comparison is toxic for traders. First, you never see the full picture. Someone posts a $5,000 win. What they don't show is the 4 losses that same week, or that they're down overall for the month, or that they risked way too much and got lucky. You're comparing your behind the scenes to everyone else's highlight reel. Second, everyone's journey is different. Someone might be profitable in 6 months. Someone else might take 3 years. It doesn't mean one is better, they just had different starting points. But when you're comparing, you feel like you're falling behind. And that creates anxiety and desperation, which leads to bad trading. Third, seeking validation from other traders is dangerous because most people online don't know what they're talking about. They might be beginners pretending to be experts. So when you post a trade and someone says, that's terrible, what does that tell you? Nothing, because they're not you. But it still affects you. You start doubting yourself. The liberation. The shift happened for me about 2.5 years into trading. I had been posting my trades regularly in a trading group. One day, I posted a setup I was excited about. Someone commented, "This is going to lose. You don't know what you're doing." I almost didn't take the trade because of it, but I had done my analysis, so I took it anyway, with less confidence. The trade won. Made me nice profit, exactly as planned. But that comment bothered me. So I looked at that person's post history, and I realized they had been giving advice on dozens of trades. And about half the time they were wrong. They weren't an expert, just another person with an opinion. That's when it hit me. I had been giving my power away, letting random people affect my confidence. So I made a decision. I stopped posting my trades. I stopped seeking validation. I left most trading groups. And my trading got better, because I was no longer trading for approval. I was trading for myself. The lesson. Here's how you know you're experiencing this sign. 1. You've stopped posting your trades on social media. Not because you're ashamed, but because you don't feel the need anymore. 2. You see someone post an amazing win and you feel nothing. No jealousy, no FOMO, no self-doubt. 3. You've stopped asking, is this a good trade? And started asking, does this meet my criteria? 4. You're okay with being contrarian. If everyone is bullish and you see a short, you take it. 5. You've stopped consuming endless trading content. This is one of the most liberating shifts in trading. When you stop caring what other traders think, you free yourself to focus on your own process. If you've experienced this shift, if you've tuned out the noise and trust yourself, that's sign number 5. Sign #6. You're treating trading like a business, not a game. When you're a beginner, trading feels like a game. It's exciting. It's thrilling. You're betting on whether price will go up or down. You're trying to beat the market. There's an element of gambling to it, that rush when you're winning, that sinking feeling when you're losing. But when you mature as a trader, everything changes. Trading stops being a game and starts being a business. And businesses aren't emotional. They're systematic. They're process-oriented. They're focused on long-term profitability, not short-term excitement. The business mindset. Let me break down what it means to treat trading like a business. Businesses have business plans. They know their strategy, their target market, their competitive advantage. Professional traders have trading plans. They know their strategy, which markets they trade, their edge. Businesses track everything: revenue, expenses, profit margins, everything. They make decisions based on data, not feelings. Professional traders track everything too: every trade, every win, every loss, win rate, profit factor. They analyze their data constantly. Businesses have systems and processes. They don't reinvent the wheel every day. Professional traders have systems too: pre-market routine, entry checklist, trade management rules, post-market review. Everything is systematized. Businesses focus on consistency and scalability, not home runs. Professional traders do the same. They're not trying to double their account in a month. They're trying to generate consistent 2 to 5% monthly returns they can scale up. Businesses separate personal finances from business finances. Professional traders do too. They don't mix their trading account with living expenses. They pay themselves a salary from trading profits. Personal transformation. I had been trading for almost 3 years when this shift happened. I was talking to a friend who runs a small business. He was telling me about his quarterly review process, how he analyzes all his numbers, how he identifies what's working and what's not. And I realized I wasn't doing any of that with my trading. I was still treating it like a hobby, like a game. So I decided to change that. Here's what I did. First, I created a comprehensive trading plan. 20 pages. It covered everything: my strategy in detail, risk management rules, trading schedule, goals, contingency plans. Second, I set up proper tracking, a spreadsheet that logged every single trade with dozens of data points. Third, I committed to weekly and monthly reviews. Every Sunday, 2 hours analyzing my data. Fourth, I separated my trading capital from personal finances, opened a separate bank account just for trading, set up a system to pay myself a salary. Fifth, I created systems for everything: pre-market routine, entry checklist, trade management rules, post-market review. Sixth, I set realistic business goals: not make $1 million, but generate 3% average monthly returns for 6 months. Within 3 months of implementing all of this, I became consistently profitable. Not because my strategy suddenly got better, but because I started treating trading with the seriousness and professionalism it requires. The lesson: here's how you know you're experiencing this sign. 1. You have a detailed written trading plan, actually written down, and you follow it. 2. You track every single trade with detailed statistics. You know your exact win rate, risk-reward ratio, profit factor, maximum drawdown. 3. You have a consistent routine. You trade the same time every day, same process. You've eliminated randomness. 4. You set realistic, business-like goals. You're not trying to get rich quick. You're trying to generate consistent returns that compound. 5. You treat losing money as a business expense, not personal failure. A business has overhead costs. Your overhead is your losing trades. 6. You invest in your trading education and setup, like a business invests in training and equipment. 7. You're patient. You understand businesses take time to become profitable. 8. You're professional. You don't rage. You don't revenge trade. You show up every day and do the work. If you're treating trading this way, if you've made this shift from gambler to business owner, that's sign number 6. And if you've experienced all 6 of these signs, let me tell you, you're not just getting close to becoming profitable. You're probably already there, even if the results haven't fully shown up yet. Because profitability isn't just about making money. It's about becoming the kind of person who can make money consistently. Final encouragement. Here's what I want you to take away. The journey to becoming a profitable trader isn't a straight line. It's messy. It's frustrating. But progress is happening even when you can't see it. The traders who make it aren't the smartest ones. They're not the ones with the best strategies. They're the ones who don't quit. They're the ones who recognize these signs of progress and keep pushing forward. So if you've recognized yourself in any of these 6 signs, take that as confirmation that you're on the right track. Don't give up now. Keep trading, keep learning, keep improving. You're going to make it. If you found this helpful, drop a like and subscribe. And comment below which of these 6 signs resonated with you most. Where are you in your journey? I read every comment. That's it for today. Keep trading smart. Keep trading with discipline. And remember, the market rewards patience and consistency.